Hello and welcome to Market Week in Review for the week ending July 21st, 2023. My name is Zoe Wargans, and today I am joined by one of our investment strategists out of Sydney, Alex Kuzley. Alex, nice to meet you. Happy to have you.
Nice to meet you. Nice to see you, Zoe. How are you?
I'm doing pretty well. All right, so let's kick this off then, shall we? Let's start with an overview of the U.S. earnings season. Any surprises there?
Sure. So we're still pretty early into it. I think we've got about 18% of the market has reported. The two themes that have come through, so the banks have generally beat expectations and have had pretty solid earnings. And then on the tech side, we've had a few names come through, so Tesla and Netflix, that both came in a little bit under expectations. We saw them both stocks sell off through the week. We also had Taiwan Semiconductors provide their annual outlook, and they cut their revenue forecast. So there's a little bit of pressure there, but we really get a better sense of tech next week. So we have Microsoft, Google, Amazon, and Meta, the owner of Facebook and Instagram, reporting next week. So I think that will give us a much better sense. But for now, the general trend has been better than expected for Q2 with a bit of softness in tech.
Well, that's always good to hear, better than expected. Thank you. So can you share some insights into the economic data out of China recently?
Yeah, sure. So we got Q2 GDP, we got the monthly indicators as well for retail sales, industrial production, and fixed asset investment. The general thematic that came through was softer than expected. So the year-on-year GDP number was much softer than analysts had expected or economists had expected. China is still facing the same struggles that we've been talking about for a year now. Soft consumer confidence, property market that's struggling, and a lack of willingness to put a great amount of stimulus to work. We think that 5% for the total 2023 GDP growth is still reasonable. And there's been a couple of announcements around stimulus just this week that's largely around trying to provide support to the consumer, but they're very small and they're very piecemeal approaches rather than a kind of big style of stimulus that we've seen. So we suspect that a lot of analysts have now been downgrading their GDP forecasts from 6% to 5% now, a lot of them are at. So that adjustment has started to happen, and we're really going to be looking to next week's Politburo meeting where the leadership meet, whether we see any more stimulus measures coming out, because so far what we've seen probably isn't enough to really get the consumer back in track and spending.
All right, interesting. Lots to keep tabs of in the next week. All right, so let's wrap up by hitting on a topic that it seems like we are always talking about here in Market Week in Review: inflation, everyone's favorite. But this time we actually have something of a different kind of surprise out of the UK.
Yeah, and so it's kind of an interesting backdrop that the UK, if you look at a chart of core inflation across most regions, the UK stood out is that it came up, came down, and then went back up. In the last couple of months, we saw a pretty strong inflation impulse through April and May. This week, we saw a pretty big surprise to the downside, so it was much softer than expected, which is quite encouraging, given it had been that anomaly that had been moving higher. And we saw a pretty marked reaction from bond markets. 2-year gilt yields, so 2-year UK government bond yields, down 17 basis points as of we're talking now on Friday morning open in Sydney. They were down as much as 35 basis points at one stage through the week. I think the important thing to note, though, is it was lower than expected, but we're talking about 6.9% core inflation. That's way above target still, so it's not going to stop the Bank of England from doing a couple more rate hikes. But there was a lot more rate hikes priced in at the start of the week, and I think that this is encouraging that maybe they don't have to go to that 6%, 6.5% cash rate that previously had been expected.
We'll take the good news where we can, right? Well, thank you so much, Alex, for all of your insights. It's been really wonderful talking to you. And thanks to all of you for joining us for another Market Week in Review. We hope you see you next week.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.